welcome to The Financial Operator. I am your host, Jen Pfizer, owner of MKB CFO and Bookkeeping. And today I'm really excited to talk with our guest today because as we were talking prior to the show, I think he's got some really great nuggets of advice as we get this conversation going. So welcome, Jaden. It's great to have you to this podcast. Welcome. I don't know where I'm going with that, but just welcome to the show.
Thanks for having me, Jen. Happy to be here.
All right. Well, I always like to ask, just tell me about yourself. I'll let you lead the conversation here.
Yeah. So I feel inspired to share, I'm going to take you back to the very beginning, and I'll be brief, but when I was 14, I had an epiphany. And have you ever had an epiphany, by the way?
Mm-hmm.
Okay. So, in an epiphany, for me, it felt like time stood still and I just knew certain things on the inside. And I was in my mother's townhome. I came down the stairs and I know I'm dating myself, but on her dining room table was a big old boom box. And in that boom box was a cassette. Oh, geez, I know we're going way back here in time, but it was Wayne Dyer speaking. And what was really odd was that no one was home, but yet this cassette was playing. And I was like, I just found myself transfixed. I'm standing in front of it and I'm listening and I'm thinking, wow, I am meant to be here in this moment. So as I'm listening, I knew three things really clearly, like I could feel it in my bones. And the first thing I knew was I'd be speaking on stages around the world. The second thing I knew, or I was told, that I would be talking about money, helping people be financially empowered rather than enslaved by money. And the third thing that I knew or felt was that I would be teaching from personal experience, not from a book I read or a course that I took. So can you imagine, at 14, your whole life purpose is downloaded to you? And all I did was follow it. I went to school at American University, studied finance, went to work on Wall Street in 1990 during my 20s, worked on Wall Street the entire decade. And I thought I'd be there learning about money. What I learned about money was from my really wealthy clients who came into Merrill Lynch with their multi-million-dollar portfolios and their individual stocks that they owned. So that's a little bit about who I am. I'm a total financial rebel. I'm also a clairvoyant. I'm also totally tapped into my inner knowing. And I have followed that my entire life, and it has brought me, I think, an easier path than had I not followed it.
Mm-hmm. Yeah, you've went with your destiny or your whatever it is, instead of trying to fight it. That's okay. So tell me more, had you had any of these thoughts beforehand? Was money at all at 14 years old? Were you like, yes, I'm really interested in money, or was it just totally out of the blue?
I was always a kid who was interested in, I had a stamp collection and I had a coin collection. But then when my parents got divorced, my mom took all those and sold them and to pay the light bill kind of thing. And for years I was so upset about it. But then I thought, you know what? Hey, I did such a good job that my investments paid for our lights and brought groceries, So I was able to switch that up. But by the way, parents, if you ever want to take your kids coin collection or stamp collect, just let them know ahead of time. I think that's really important. A little bit of disclosure and conversation would have been really nice. So, I was totally interested in all of that. And that deal at 14, that experience that I had was confirmation of, my path, my course in life. So I had an inkling that I was interested in how the financial markets worked, how money worked. Although what kid isn't, right? Kids are just love money and they're always interested, I think for the most part, interested in it. So yeah, it was a really neat way to get confirmation about what my life purpose would be.
Mm-hmm. Okay. So you said something while you were talking about, your career. You said you learned a lot about money from your wealthy clients. So do you want to give us any of those insights?
So happy to. So, as an insider on Wall Street, what I want to share is I want to bust a couple myths around money, because we are told that, you got to diversify your portfolio, right? And then that is the segue into why every single person owns mutual funds, unit investment trusts, packaged products, because of diversification. But the reality is, I love what Warren Buffett said. He said, diversification is the tax that people pay when they don't know what they're doing. Let that land. Mm-hmm. So what I saw my clients do, Jen, was, multi-million dollar portfolios, a handful of stocks, 4, 5, 6, maybe at the most 8 companies they owned. We're talking Procter and Gamble, John Deere, IBM. This is way back. This is the 1990s, back in the day. And we were told as investment advisors to sell our clients' stocks and buy them these packaged products. But the reality is, every brokerage firm tracks how much money they make off of clients, not for clients, off of clients. And it's called velocity. And so when I started waking up and putting the connection together of oh my gosh, if they had just held these stocks, how much better off would my clients be with their individual stocks versus all these other garbage packaged products, managed money, all this other stuff that's making revenue for the brokerage firm rather than, really helping the client out. And it's why no one ever becomes a millionaire working with a stockbroker or an investment advisor. So, because their returns are always capped. It's always capped. Mutual funds give average returns and they all mirror each other's returns because that's how they're compensated. And what my client showed me was the power of investing money in a handful of stocks on a regular basis. So every month they would just add money to their portfolios, buy the same stocks. Didn't matter what the markets did. The markets went down, they got to buy more shares. And I followed that. So when I was 24, I started buying one company. It happened to be our parent company's stock. And I invested $70,000 into that. And within a 7-year period, that grew to just under $1 million. And it gave me enough capital. Here I was at not even 31 years old, but with close to $1 million in this investment where I could get out of the business. And that's what I did. So I learned fairly quickly that financial focus, as opposed to financial diversification, is the way to build meaningful wealth.
That is so interesting because it's the exact opposite of everything that anybody has ever told. But also, I and probably you too, you're in these entrepreneurial circles and you'll see it floated out there every millionaire has, 7 streams of income or whatever the quote is that people are passing along. But they're missing that the person made their millions by laser focus on one thing, right? We are focusing on building one business or investing in one stock, and then you diversify later after you already have your funds. What are your thoughts on that?
Well, this is my opinion, and it's worked pretty well for me, in that when you're in an asset class, you stay focused in that asset class. Mm-hmm. And when you're ready, you add other asset classes to your wealth. So stocks are a great cornerstone for anyone who wants to build wealth in order to buy, let's say, real estate or purchase a business or expand their business. So I've always used my stocks as the cornerstone of my wealth in order to extend out to other asset classes. So, because I feel like that is where diversification actually really would serve someone. And, let's talk business owners, for example, especially tradespeople who are, let's say plumbers, electricians, those type of folks. They have such an opportunity to build wealth within that business if they invest in a way that adds additional wealth. For example, that's what I love about tradespeople. they're entrepreneurs at heart, and they're good at what they do. That's why they're ready to start that business. And when they start the business, the very first objective, I think, would be to add another employee to the payroll, right? Get enough revenue going where there's cushion enough to start adding people, because that's the way. So notice there's no diversification in the business model. Rather, there's an extreme focus on building out what they know is working. And I think that is really powerful for an entrepreneur, business owner, especially if they're a tradesperson. So I think when you look at what you're doing in life, like however you're earning revenue, you stay highly focused and concentrated on that model. You figure out what's working, right? What are people paying for? And then from there, you take, profit off the top to put into another asset class. And then your wealth starts compounding because you've got additional revenue, you've got additional cash flow streams to count on.
Okay. That's I really like what you're saying, obviously, because this is very similar to the advice that I give to my clients.
Good.
Stay focused on something, but scaling smart and making sure that you are scaling at a rate that allows you to make good decisions. You can do that. You can scale a business really quickly and then end up with no money. I've seen that happen many, many times. But being smart about how you're investing it or reinvesting that money into your business and make sure that it continues to work for you and to continue to add to your wealth. And wealth, meaning the business you own, is your wealth, your retirement, your net worth. So continuing to add to that. Okay, so how long were you on Wall Street in corporate America? How long did you work there?
The entire decade of the 90s, and retired in January of 2000, so 10 years to be exact. Yeah.
Okay. Oh, wow. Did you see the .com? Like not .com, Y2K. That was what I was thinking. Y2K. You were like, I'm
No,
out.
You're right. It was Y2K. It was .com back then. A huge bubble. Fortunately, I got out of it right before then. I didn't have to, go through that. So, but I remember those days specifically because I would watch ads. There would be ads running on TV of technology that wasn't even developed yet, but is now starting to be developed. I don't know if you remember back in 1999, early 2000, it was all about the glasses that you could wear, and it would give you, information on, it would help companies market because it would show, and all this stuff. And now it's now we've got the glasses. So for sure, it was just a weird bubble time back then.
This is probably, I always think about being a kid and watching Inspector Gadget and stuff, and he had all of, it was cartoon, but he's got all of the cool things, and I'm the watch that would give you all the messages and stuff, and I'm we have those.
And now we do, for sure.
But so you went then out on your own, is that right? And started your own business?
Yeah, I started buying, with the capital I had, I started buying affordable buildings. I started in real estate, and I picked a town in Florida that didn't have really quality affordable housing. And I read a book called Do Well by Doing Good. And the author talked about, if you really focus on helping other people get what they want, you'll get what you want. And I embraced that. I was like, wow, that's brilliant. I like that philosophy. That really resonated with me. So I started in buying apartment buildings and fixing them up and offering quality, affordable housing in a city that had none. The affordable housing was kind of relegated to South Side, and they were just really poor areas. Buildings were in disarray. And I took a waterfront community and started buying buildings there and developing them for affordable housing. And it ended up working out fantastic. And I did that for 7 years. But then my twin brother got sick and with cancer. And I remember him telling me, we got to have many really great conversations toward the end of his life. And I remember him telling me, man, I just feel like I haven't lived my purpose. And right then, like something came back to me so strongly because I said to him, I said, wow, I said, I know my purpose and I'm not living it. My purpose was to work with people, to speak on stages, to share knowledge, to be a mentor. And I wasn't doing that. And I said to him, you know what, bro, I promise you, I am going to live my purpose on point for the both of us. And right then I liquidated all of my real estate and started teaching people about real estate investing because it was the one thing I was doing at that time, and started working with people, spending hours and hours and hours with people. And guess what? I did it for free and they did nothing with my advice. So that taught me right there. It's like, oh, okay, people value what they pay for. So then I started, kind of formalizing my training and putting together packaged material and a weekend workshop, and people paid to come to that workshop and learn about real estate. But I always knew there was this thing in the back of my mind that reminded me I only was able to do what I did in real estate because of what I did in stocks. Stocks were my foundation. And I remembered my clients, my multi-million-dollar clients, didn't even matter, 80 years old, they'd come in and they'd have individual stocks. And I remember thinking, I'm going to teach people that. I'm going to teach people how to, because the barrier to entry to invest in stocks is way lower than investing in real estate. Real estate, you need like certain money down, and the more expensive a property, the more money you need down. So I thought, let's help people with step one, right? Step one, take a little bit of money that you've got and invest it in a way that is meaningful, that actually creates wealth for you. And then from there, you can do other things. So I sold all my investment properties and started teaching. I called it Money Mentor Program. I started teaching a Money Mentor Program. This was, I guess 12 years ago now. Yeah, about 12, maybe a little longer. 12 years, maybe 15 years ago. And I had a student who just loved what I taught. And she said to me one day, I really like what you're doing here. And it's so meaningful and impactful, but could you create software around this? And I thought, well, I don't know, maybe I could, I said, well, I personally can't, but, maybe I can figure it out. So the universe just lined everything up perfectly. I had a couple students in one of my courses, my Money Mentor course, and he just called me out of the blue one day and he said, hey, I've got a partner and we're computer programmers, and we are, one of our clients is not renewing with us. So we've got time. Do you have a project you're interested in working on? And I said, well, actually, I do. I think that, I'm teaching this Money Mentor stuff, and one of my clients suggested to create software. And I said, if we could create software for novice investors, people who didn't know anything about investing, if they could find a winning stock in 2 clicks or less, I think we'd really make a difference in the world. And they said, we're in. So that's how the next step got started. And that's been 8 years now of us developing software that is really making a difference for people and their investments.
Okay, and what's the name of the software?
Sterling Stock Picker. Sterling is my last name.
Yes.
Yeah.
Okay, I like it. Okay, so that was 8 years ago. So you basically, you took an idea and created the software around it, but then you're also building a new business around it as well, I assume, because
Yes.
you're taking all of the things that you're getting into the software business, which is very different than what you were in previously. So Tell me about that kind of transition.
So you're right. We transitioned to a SaaS company, software as a service company, and a whole new playing field for me. But I love challenges. I love learning. And it took me probably 5 years to wrap my mind around what we were actually creating and the opportunity available for people and for us, and ultimately for our investors. And so it really took time. It took me more time developing the SaaS company than it did my real estate portfolio, because I was now part of a team. I was one cog in a wheel that was spinning, And so I had to really adapt to working instead of solo, but to working with partners. That was a big adjustment for me because I've always worked individually. And then to chart out a course to determine, like, what does this look like at the end? Like, real estate's simple. You sell your buildings, you sell your properties. Like, it's a very simple exit strategy, no brainer. But SaaS is very different. When we, 5 years into our venture, we chose to bring on investors in order to continue to grow our AI learning platform and our machine learning, because it just eats up gobs of money to develop that part of the business. And, so now we're sitting with 32 people who invested in us, and they're wanting a return on their investment. So now, as I layer aspects on from solo entrepreneur to partnerships to investors, to then deciding, what will this look like at the end? So that's the biggest challenge I've seen so far, is the actual exit strategy for people. With me, I love what I do, so I'll just keep doing what I do, and I can continue to do that for a very long time. But when you bring in another layer of investors into the equation, it changes things. That makes sense.
Mm-hmm. So let's go back a little bit, because you've touched on a couple of things that I think are really important. First, you mentioned that when you went from being solo to having partners, that there was maybe some adjustment there. What kinds of things did you have to go through, or what did you learn about that process that you would not have thought, if you could go back and tell yourself?
I learned that people are motivated by positivity. Sometimes I can be very focused and forget that aspect of it. Like, I'm constantly telling my partners what a great job they're doing and thanking them with gratitude of what they're doing, because, I'm like very mission oriented, and I can think of, my mind works very quick, so I can think of many things down the road. It's like, and when you're into a company like a software or SaaS company, there's always going to be a million things on your plates, right? Everyone has so much going on. And so I'm more of a forward thinker. Okay, well, that's great. We've done this. All right, now this is next, this is next, this is next, rather than taking a breath and saying, giving the pat on the backs, because I'm steering the ship, right? So I think we have to remind ourselves as we steer the ship to thank everyone along the way who are rowing the ship, because there's so much to it, and that goes a long way. So I think, if anything, I think I've probably upset my partners by not doing that enough in the beginning.
Did you have any? So it sounds like the partners that you ended up with just kind of by chance, right? Like, you just kind of, like, you knew each other, but it wasn't what's the right word? Like a structured way, like you went out and found the people that would like you kind of did, but skill-wise, but maybe not personality-wise. Were there any, it sounds like there was some, maybe not personality conflicts, but just some learnings of personalities. Was there any other, like, if you could go back and be like, okay, I'm going to start a partnership with 5 other people, I would do this instead? Obviously, everything has worked out fine, and there are no complaints about where you're at. But theoretically.
Yeah. I would, I don't know how much I would have changed. Mm-hmm. I operate in a way that I trust what comes to me, whether it's a thought, an idea, a person, or a place. Like, I just allow for that. So when he showed up in my realm, I was like, oh, yeah, of course, you're here to partner with us. And, when us, I say my wife and I, because I got her in on the mix. And the funny thing is, my wife shares the birthday with one of my partners. So they're born on this different year, but same day. It's just so crazy, So I think I I'm trying to think of what really helped us move the needle in the business. And so we did things like Trello, for example. It used to be called Trello, where we were all online together, created a workspace for all of us to tap into. And then through that system, knew where we stood with every aspect of the project and what needed to be done next. So that was invaluable. I will say that. Every partnership, because we're all located in different parts of the world, and we needed that unification part. So, but that didn't start right away. So I would probably have incorporated that way sooner than we did, because in the beginning it felt like, we're all working on our own thing, but there was never a unified place for us to go to see status reports, what's next, all that. So, but to our defense, it was a long time ago when we started this, and things weren't quite as easy with different software to track certain things. So I would say that was probably our biggest thing is lack of a unified space to create next steps.
Okay, that's a valid point, and that's something that even now, when there's hundreds of tools at everyone's disposal, I see it happen a lot too. Everybody's just very focused on what they are themselves doing. And then all of a sudden it's like, hey, what's so-and-so doing? Or what are they working on? And there's been some sort of either miscommunication or non-communication whatsoever. And you're...
Or non, yeah.
Yeah,
good one.
Farther apart than you may have thought. So, okay. So great insights there. So then you moved in, your company is couple years in, and then you bring in investors. Is that what I heard you say?
5 years in, we brought investors in. We wanted to make sure that we had something that really worked. I know there's a lot of companies that bring in investors right out of the gate before they have traction, before they have really a model that is actually working. We didn't want to do that because we brought in family and friends and users of our platform. So to us, it was more important to make sure that we had a bona fide product, that works well, that people love, that they want to pay for. And then that's when we stepped up and brought investors in at the 5-year mark.
How long were you working before? I mean, I assume you did not have a product on day one. So how long did it take to actually develop something where it could be sold?
Good question. It took us 2 years, but mind you, we were, my partners had full-time jobs, so we were working every weekend and 3 nights a week together. So I would consider that part-time. And it took us 2 years to even get a product where we could have beta testers, people testing it out. For up to that 2-year point, I was the only tester of the product. And we wanted a fully functional platform before we even brought in testers. So, and probably most companies do things differently. Like what I see today actually is people have an idea or a concept and then they just start marketing it. And rather than, they think that they'll build it out as they attract people, but I don't know, we just didn't feel comfortable with that. We didn't want to do that. We didn't need to do that. We weren't in any big rush to, put this out. My partners know nothing about the stock market, but they know everything about programming. And I know nothing about programming, but I know about the equity markets. So it was also teaching each other, okay, they would rein me in going, no, it's impossible to do that. We can't do that visually. We can't, whatever. But for the most part, they're such good sports, and they would always say, "Well, we'll figure it out." We don't quite understand that, but we'll figure it out. So we took our time, and once we had 500 active monthly users, people paying to use our product, and we were self-sufficient, that's when we started raising capital. And you and I were talking before the show, and it's probably not that I want to call it, it's probably one of those things where if I look back on the business, we do way better with spending our revenue rather than investors' capital. We just make, for whatever reason, I don't know what it is, we just make way better decisions. And not that we've made any bad decisions with investors' capital, but it just changed things for the business. We went from like barely making it, right? Just we got the bills paid because of all the back end that we have. It's very expensive to do what we do, and then to go from barely making it to hundreds of thousands of dollars of cash available to us to put to work. So it was just a big. It was interesting. So now we have partners and investors, 32 investors who we are beholden to, and which is fine. And we're looking forward to doing a good job for them as well. So now we have this. It adds a layer of complexity, which is exit strategy, right? Because that's something that is constantly on my mind of how am I going to get these people a profit for their investment.
Do you have any regrets about bringing on investors?
Definitely no regrets, because they're phenomenal people. Like I said, friends and family and users of the platform, people I've known for decades. And so no regrets, just like I say, but I am one who I like to underpromise and overdeliver. So that's just who I am. That's my personality. It's always been that way. So I'm constant. It's what it has done for me, though, is it's put in the back of my mind all 32 people plus my partners, and I put that weight on my shoulders to, make sure that they're going to be really pleased with the return that they get. So, it just has added a layer of not concern for me, but a layer of thoughtfulness that I wouldn't have had I not brought on investors.
Mm-hmm. Do you have any plans to go public?
I think, we have plans to. I think we're going to go on a tokenized exchange. Because, now we have 4,500 people on our platform. So we've experienced a lot of growth. The lion's share of that growth was all of 2025. We added 3,000 people to our platform. So it grew finally. You hear it takes 8 years to become an overnight success. So we finally tipped over to this really phenomenal growth. And I thought about it. I'm like, wow, all of our people are investors. And how cool would it be to trade on a tokenized exchange for our investors? So then there's that exit piece for our investors, but also for our members of the platform, where they can, buy into, because we've had such good results with the platform, such good feedback, that I think we would have many who would be interested in partaking in the growth of the tokenization. And that's becoming a big thing through the equity markets, is companies tokenizing their shares rather than publicly traded. Because, with publicly traded, whether you're going on the NASDAQ or a minor exchange, it's very expensive. It's a few $100,000 in attorney fees and filing fees. And then you have to determine, are you going to go with a shell corporation or do a not a reverse mortgage, but a reversal of the shares that you have. So it's like it can be complicated. Whereas my view of a tokenized exchange could be pretty simple and happen fairly quickly.
Okay, so when you say tokenized, like where would that be? Where do people do that?
So there's companies like Securitize, where many companies have a form of, even publicly traded companies have a form of tokenization, and they have tokenized some shares, and it trades on a tokenized exchange. So we would probably go with Securitize. It's the largest tokenized platform in the world. And then you've got access worldwide, whereas the exchanges are limited. They're in some countries you can't really buy US stocks or what have you. But because our platform is global and we have representation in many countries, it would just be a no-brainer for us, to do that type of thing. So I think I think that's kind of where we're headed in a few years is to do that.
Mm-hmm. Okay, and so that's part of your exit strategy. Am I hearing
That's
that
it.
right? Yeah.
Yeah.
Okay. Very cool. You're the first person that's ever said that as part of their exit strategy, to me at least. So,
Okay.
Cool to hear. So as you have kind of changed, because you went from solo to partnerships to investors, like over a long period of time, and different types of businesses as well, like, are there certain themes that happen throughout, like no matter what stage of business you're in, you're like, you think you're getting over this hump and then it's like, oh, there's another roadblock coming up. Does that happen no matter what size you are at?
I think it happens no matter what size you're at. We just today, actually, we heard, we were contacted by the SEC, Securities Exchange Commission, regarding our use of AI in our platform. What happened was, over the last few years, many companies have been what's called whitewashing their AI, which is they're promising something that their AI doesn't do. So they're saying, hey, our AI can do X, Y, and Z, when actually it only does A, B, C. So the SEC has been cracking down on companies, and they reached out to us and they audited us. And for 18 days, we had to drop everything and get all kinds of data and information to them to review. And just this morning, we heard back from them and said, you know what, all good. We're going to leave you alone. Everything's fine. We didn't find anything. We're like, oh, yeah, we knew that. We were trying to tell you that. But, so that, I think, what is this saying? Like when you start to grow and you get on the radar, when you start to really put yourselves out there, you open yourself up for scrutinization. And that's what they did. They scrutinized us very closely about our use of AI and our promises but I've always said, and my partners are the same, we underpromise and overdeliver. So we never promised anything with our use of AI that we couldn't deliver on. Thank goodness, right? Or else we would be looking at fines and being shut down right now. We wouldn't be having this conversation. So I think you got to be really careful at any level, of business growth, whether you've made it to the big leagues or you're, a small private entity that is a solo entrepreneur, doing it on your own. Because it's weird. It's like, I don't know if you found in life, Jen, but sometimes when you're doing well, people want what you've got and they don't want to do it on their own. They would rather just take what you have. Mm-hmm. And, it's hard for me to say that because I'm like a really true optimist. Glass is totally more than half full all the time, but when we're getting real here with things, that is the reality. And that's why we have structures of like LLCs and, setting things up properly from the beginning, which I'm sure you help your folks do. And I admire that because everyone needs a proper structure out of the gate to protect yourself, because you don't know what's going to happen. You don't know when the next financial shoe crisis is going to drop like it did most recently in 2008 and 2020. And then you're stuck, in 2008, like with the financial markets imploding. The banks were made whole, they were bailed out, but all investors really got the shaft, like it was a bad situation. And so I think the key is to be in the driver's seat, to limit your exposure to banks and lenders is really important, because they ultimately call the shots. And so if you can really build wealth in a way like we talked about, like my big thing recently is I'm back into real estate, but I'm doing it very differently. I'm doing it with cash. I'm buying homes with cash, fixing them up with cash, not doing any type of leverage with a mortgage or anything or a line of credit. I have no interest in that anymore because it can, because then someone else is calling the shots. So I think for people, investors, and they're out there, their deals are out there. You can, you just got to really look. It's not a MLS kind of thing. It's more of like maybe you go to auctions and look at different platforms that way, and really get real estate for a lot cheaper than an average priced home. So anyway, I guess that's a long-winded way of saying what I've learned over these decades is, and I'm getting ready to roll into my 6th decade, which is so weird to say, but do your best to call your own shots, really create things in a way that you're in control, not someone else.
You mentioned something a little bit ago where you're like setting up your entities correctly, or I've been having this conversation. I don't know why. All of a sudden I'm having this conversation with a lot of different people. But part of this conversation is regardless of who, like if somebody's partnering with another person, you may be best friends right now, and you obviously hope that things will be forever that way. Like nothing is ever going to go wrong in this business that would part your friendship, your marriage, your whatever. But having taking the emotion out of these conversations and just sitting down and being like, okay, if X happened, if we were both in a car accident, what happens to the business? If one of us gets sick, what happens to the business? All of these things that if those are talked about in a time where it's not happening right now, it's a less emotional time, and you put some of that down on paper and, operating agreement, doing what we're all supposed to do, it takes away a lot of that pressure should something happen then in the future. There's no, oh shoot, we need to have this conversation now and decide when we're in, somebody's partner is in the middle of a divorce. There's all these situations that, like you said, you don't know people until you are in a situation where there's money involved and somebody feels like they are, either they want what you have or they feel like they're not getting enough from you, your company, whatever it is. So my long-winded rant here is making sure that you are covered and have had those conversations with the people around you, and be careful about who you bring in.
And that's such an appreciated rant because it's so true. It's like, I'll give you an example. I'm visiting my folks here in West Virginia, and we're in a very small community, and there was an amazing coffee shop called the Wild Side or something. And went there last summer and just had great coffee and great food and just this really great area where people came together. Well, I came back here and I'm like, hey, why is the Wild coffee shop closed down? They're like, oh, the partners had an argument and they split. So they had to close the shop, but one of the partners is going to open up down the road and it's going to happen maybe this summer. Anyway, it impacted the community in such a big way because it was like the best coffee shop around, and people would come from, other small communities out here. So to your point exactly, these partners had no operating agreement. They had nothing in writing. They just got in an argument and said, forget this, I'm out of here. And what an impact it creates. Every action creates a ripple effect, and it's affected this community. And me, I can't get a great cup of coffee around here. So it's really upsetting, but you're absolutely right. Operating agreements, even a buy-sell agreement, key man insurance is important, right? Like if you have a significant, your partner is significant in the business. What if something happens to them? Well, one of our partners' wives just died suddenly, did not wake up. And, it's like, it just woke me up to, wow, okay, that's his wife. She's not involved in the business, but he is very involved in the business. What if that happens to one of us, right? So we're on the hunt for key man insurance so that the business won't be impacted negatively should something happen to us unexpectedly. So yeah, good point.
I'm a widow. My husband passed away 5 years ago, about 5.5 years ago. And so just by nature, having been through that, I'm like, we are talking about the hard topics, right? Like we're not going to, I know nobody gets married thinking they're going to get divorced, but what if it happens? Or what if, you said, what if a partner gets sick or dies? And then I've been like, you're worthless for a year. So
I'm sorry to hear that.
What happens in that business, and being able to just have those conversations when it's the emotional toll is not on you right there. It's an important piece to have, but all right.
It is. I'm sorry you went through that.
Thank you. Well, not thank you, but I appreciate it. It was never something I would wish on anyone, but it's given me insights into things that I'm like, I can help, like you said, I can help people through these situations because I know what it's like to be in them, and help them get through it. So, all right. So give me a little bit of what's next. What kind of things do you have on the horizon? Anything you want to promote? Now is the time.
Yeah. So what's next? More of the same. We continuously develop the platform. We're creating a adjunct platform with our stock picker related to option picking, because so many of our folks invest in stocks and they're interested in options. So we've been working really diligently for the last 8 months to create an awesome platform that we integrate AI into it to help people with their option trading, to get good at it, whether it's selling covered calls or buying puts or calls. So we're continuously expanding as our user base becomes more savvy with their investments. We're having to address that and to grow with them. So that is definitely next. So we're also becoming a platform where traders can trade through our platform. Right now, they have to go to our platform, find a stock, and then log into their trading platform to actually transact the trade. So they're going to be able to do that directly through our site now. So we're going to package all that together for a new offering within our system. And we've never done that. We've only had one level of membership, one offering, and now we get to add this pro level membership, which we're super excited about.
That's very cool. All right. A one-stop shop instead of having to bounce around.
Exactly. Yeah.
Okay. So if somebody wanted to use you said it's an app, right? Or a website software?
It's both. Yeah. We have an app. We're in the app stores as well as having the software. Yeah.
Okay. So where would somebody find it?
SterlingStockPicker.com. Sterling like sterling silver.
Yeah. You have a great last name for this product.
Thank you. It was helpful.
Usually I'm like, don't name stuff after yourself. But in your case, I'm like, definitely it worked out.
Yeah.
Because you could sell it and nobody would have any idea that it was.
Nope. That's right. That's exactly right.
Well, Jaden, it's been a pleasure to have you on today. I've learned a lot and had a great conversation. If somebody wanted to be in touch with you, maybe they've got a question about something or, want to start their own app, how would they reach out to you directly?
Yeah, through the site, there's a contact us and that gets forwarded to me. So happy to talk to anyone who wants advice or looking for, some information. I'm happy to reach out to them as well. So SterlingStockPicker.com, and then there's a contact us, so they can reach me through there. And hey, thanks for a great conversation. I really enjoyed it.
Thank you. It was a pleasure. All right. I'm sure I will talk to you soon. Have a great rest of your week.
I look forward to it. Thanks, Jen.